we play an important role in helping millions of households save for retirement. Providing financial security and peace of mind to our clients is the primary goal of the investment, retirement, and insurance solutions that our group companies offer. Internationally and in Canada, regulators are becoming increasingly focused on ensuring that clients' interests are at the forefront of everything that companies do and at the forefront of regulation. And regulators share a common objective with us of putting the interests of our clients first. So in Canada, there are several reform initiatives being considered by regulators, many of which we support. The coming into full effect next month across Canada of what's known as CRM2 will result in much clearer disclosure to clients of the dollar value being paid to their distribution or financial advisory firm from the companies who manage their mutual funds. And this is a big step forward in providing greater fee transparency to clients. But while CRM2 hasn't yet come into full effect and its impact is yet to be observed, securities regulators are already going further and are proposing an outright ban on commissions, as was done in the United Kingdom a few years back. Now, in the United Kingdom, changes in the advice channel regulations were done under the name of Retail Distribution Review, and they were focused in part on trying to improve the quality of financial advice. So the UK effectively did what is being proposed here. They banned the payment of commissions from product suppliers to financial advisory firms. But the unintended and very negative consequence was that the number of advisors operating in the UK was greatly reduced. It's been estimated at 30% of financial advisors dropped out of the market, and it created an advice gap for consumers. Now, financial advisors provide value to their clients, mostly by influencing their behavior. They induce higher saving rates than people. They encourage the use of more tax-efficient vehicles. They encourage clients to invest in higher return asset classes and how to show them how to do that on a less risky basis. They keep clients invested when financial markets are going through a period of high volatility instead of running and selling right at the bottom. The value of advice is very significant and has been empirically demonstrated in a number of studies. So regulators who are advocating for a ban on commissions may hope that if Canadians lose access to financial advisors, they'll get their advice through other forms of distribution, like automated platforms or robo-advisors. But these alternative channels are going to take time to develop. It's not going to happen overnight. And it's not at all intuitive or obvious that the particular individuals who lose access to their advisor are going to seek or find suitable advice elsewhere. Our companies and our industries will adopt to whatever fee structure or commission structure is put in the regulation. We'll adopt and we'll make it work. But whatever regulations are passed, our advice would be to make those changes on a measured basis and not on a rush basis. Otherwise, we're going to risk hurting people, and it'll be the very same people that the regulations are intended to protect. The unintended consequences of having millions of Canadians not having access to financial advice will be detrimental to everybody's acknowledged goal of helping Canadians prepare for retirement.